Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi as well as Ajay Sharma. And the market rally today is completely all thanks to what's happening to Reliance Industries. That's the biggest headline at this point of time. Reliance Industries has not only hit the all-time high level, it's very close to 2900 mark and it's contributing almost 150 points to the Nifty rally that we are seeing right now, less than 50,000 crore away from that 20 lakh crore market cap. Of course, it's the biggest company when it comes to India in terms of market capitalization, and that continues to gain ground. The biggest single session gain that we have seen over the last couple of years, and almost a 7% rally on that one. You also have other oil and gas names which are actually doing quite well. Take a look at ONGC, that's high by around 8%. BPCL, which is a bit of a result reaction as well, is perking up, and then HPCL continues its up move. That stock is holding in the green. Not just that, the entire power sector is also powering ahead today. So SJVN, on account of that MOU, is higher. Tata Power is also in focus, and then PFC continues to make fresh highs for itself. So all of these stocks in focus, even IRB, RITES, Amber Enterprises, these are some of the big gainers today, and all of these stocks are sitting at all-time high levels. But the biggest talking point today, guys, in the trading session is what Reliance Industries is doing.
Oh, yeah, absolutely. It's hit that 19 trillion rupee market cap level, call it what you may and count as many zeros, and at a record high. In fact, before we address what's happening in the rest of the market, considering it's a single-handed Reliance show all in all, let me take it across to Samit and get in some interesting facts and data points on Reliance's move today. Samit?
Well, if you see Reliance Industries move today, it is the biggest move that we have seen for Reliance Industries at least since May 28, 2022. Now, the RSI post this move for Reliance Industries has again moved above the 70 level, which is generally considered as one of the overbought zone. Also, the stock is at a life high. In fact, if you see Reliance Industries share prices, they are now above the pre-Jio Financial demerger price, which now means that Jio Financial is exactly free for any investor who would have bought Reliance Industries share prices or shares on July 19th. Considering the demerger date or the record date was July 20th. Now, Reliance Industries did underperform the Indian benchmark, that is Nifty 50, in 2023, and at least since 2015, Reliance Industries has never underperformed the benchmark for 2 consecutive years. So, will 2024 be the outperformance year for Reliance Industries? Let's look at few of the key triggers for Reliance Industries going forward. When it comes to the retail segment, it is the expansion, increasing digital presence, and the fundraise that the company has been doing via stake sale that are the key triggers. When it comes to telecom, tariff hike is the single biggest trigger for the telecom segment. O2C segment has been range bound, it has been free cash flow generative and is expected to remain so at least for the next 7 financial years. E&P business did report a strong number in the third quarter and is expected to do so going forward on the back of stable gas prices and rising gas production. And when it comes to new energy, it is the commissioning of the phase 1 PV module, and apart from that, analysts are also expecting some kind of monetization to happen when it comes to the new energy business. Now, apart from this, there is also the deleveraging benefit that could kick in for Reliance Industries from the mid 2024, and then there is always a optionality with Reliance Industries to go ahead and demerge its retail and the telecom arm, which could be the biggest trigger for Reliance Industries going forward. Apart from that, if you see the valuations of Reliance Industries, they are not very expensive. The 12-month forward EV to EBITDA stands at close to 12.3x, which is nearly at par with its 5-year average, which is also at 12.3 times. So a whole lot, if you see multiple triggers that are in place for Reliance Industries, which could have led to such kind of a rally for Reliance Industries in trade today.
Thanks for that, Samit. In fact, the top 6 names in the Nifty right now gaining, 5 of them are actually commodity stocks. Coal India, BPCL, ONGC is up 8%, and of course Reliance. Of course, the main focus is on Reliance, but that's what Reliance does the stock. When you're expecting nothing from it, it starts moving. For last so many months, the stock was the biggest drag on the index. Ownership fell. In fact, even in trading, on trading days, several trading days or trading groups, you would see the mention of Reliance almost vanished, and that's exactly when. And now the stock is moving up, firing in trade. There's also the buzz of tariff hike as far as the telecom business is concerned by mid next year is something which is keeping traders excited in Reliance Industries. We'll discuss all of that, but there's another stock which is catching my attention, which is BPCL. After a very long time, good 4-5% move coming in, and the number which came on the screen, Samit is still there with us. Samit, what led to such massive bump up as far as their profitability is concerned, and does it appear one-off?
Well, in fact, a similar kind of move was in fact seen in Indian Oil operation numbers also. Analysts were expecting the company to report an inventory loss, but actually the company had reported an inventory gain, and we think that similar kind of move would have happened in the financials of BPCL as well. Analysts were expecting an inventory loss to come in, but actually there could have been some inventory gains, which has actually led to this higher EBITDA number for BPCL in the third quarter. In fact, the EBITDA number at close to 6,226 is higher than, in fact, the highest estimate that was there in the street at close to around 5,900 crore rupees. So most likely the inventory gain or lower inventory losses is something that would have benefited BPCL. In fact, if you see BPCL's 9-month now EPS stands at close to 105 rupees per share, which is the highest ever that we have seen at least since 2006, and we are talking about the annual years. So in fact, the 9-month EPS is higher than the annual EPS that we have seen at least since 2006. So strong set of numbers coming in from BPCL, largely on the back of lower inventory losses or inventory gains. We have still not got that detail. So most likely this would have been the key reason why BPCL is gaining in trade, and the numbers have come in much ahead of what the street was expecting.
Okay, so let's take the discussion, widen it a little more. We have Nuresh, we have Sunil Patnaik, and also Daljit, who's joining us. Daljit, since we are talking so much about energy stocks, oil and gas, which end of the market, oil and gas and energy, if I may, bucket it like that, do you think is most under-owned by institutions, HNIs, retail? Is it the OMC? Is it RIL? Or even upstreams have started moving like ONGC, etc.
Good afternoon, Ajay. I think we are very bullish on the upstream part. We have also loaded up on oil and gas sector as such overall in the last few months. And our preference was always on the upstream side, both on the gas as well as oil side, mainly because after many years, one thing is very clear that after so many years, we have seen a new discovery of oil coming in, and that production has started for ONGC now. So that itself is a very big game changer. Second thing is that when these stocks normally come out of 7, 8 years, 10 years of underperformance, they usually run for a very long time, mainly because things would have changed. Most of the previous owners would have moved out of the stock. So technical reasons are there, and then fundamental changes are happening. One thing is very clear from the government side that we've seen much less interference in these companies in the last 1 year, 1.5 years. Probably government is happy with the $75 kind of pricing for implied valuation for per barrel for the ONGC, etc. So I think that is very well accepted by the market, and that leaves good scope for appreciation in these stock prices. So I think there are a lot of changes happening in this sector. Besides oil and gas, in energy sector as such you say, then again power, renewable power is doing well, but even thermal power is doing well. Again, thermal power is seen light of the day after 10, 12 years. NTPC used to be sometime in 2008, 2010, people used to talk about it. And then for last 15, 20 years, we did not talk about it. Now, again, we are talking Coal India has come out. So I think there's a lot of change happening because of that ESG thing also, which are in between cropped up. That is gone now. Many things have come at a confluence for this sector, and that's why the sector is doing very well. Of course, the under ownership also plays its own role.
What are you seeing on the charts for Reliance? Does it seem like more of a short covering led move? And considering names like ONGC, Reliance are coming out of a long period of hibernation, what's next on the cards?
So if we look at these names, we discussed ONGC in the morning as a buy trade, and I've been discussing it how the stock has done nothing for a long period of time. Gave a breakout above 200 odd levels. It's a 5-year breakout. And the stock was one of the most under-owned names in the oil and gas pack. And this pack as such has been under-owned relatively. So the trend is just a start. And we've seen when trends start in such names, they continue to surprise. For example, NTPC, when it broke out a year and a half back, the stock has gone up 100%. And it still continues to hit new all-time highs. So continue to remain bullish on ONGC. Reliance hitting a new all-time high is generally an indication of a fresh move rather than short covering, because we see short covering after a correction. So out here, it's a fresh breakout. We've broken out into new all-time highs. Did a retest also of that breakout point 2650, which was the previous high, X of Geofinance. We did a retest and now we've hit a fresh high. So it now becomes a buy on all dips. So the whole oil and gas pack looks pretty promising. It's just that today's move makes it a little difficult to take a fresh position, but any dips of 3-4% going forward should be a buying opportunity.
I was trying to make, Anisha, was that Jio Finance actually becomes
Free. Yeah, I know. Apart from the time value of money, of course, but nonetheless, it becomes free for now.
I mean, I know so many people in the market who bought in the first 15-20 days.
Purely to get Jio.
And Jio Financials, I'm saying, when the merge thing came.
Correct.
And
After
then
the
it
listing.
did not move for like 2-3 months. Or so.
Actually declined for a
Actually
long
declined.
time. It was actually on the negative trend.
Promoters
and
were
finally,
buying and impatient
Yes,
investors
correct.
exiting. And that stock could have
And
become
now you have
free.
the clarity also in terms of what business plan they had, because initially, of course, the big doubt was that there's nothing in the P&L for now, though a lot is sitting on the balance sheet, but that clarity has emerged. But you know, apart from Reliance, let's not forget the contribution from L&T today. That stock is higher by 4%. It comes out with its earnings tomorrow. We'll shortly get Lisa to talk to us about the earnings expectations. But before that, Sony, let me bring into the conversation for L&T on the chart. What does it suggest? And even the power financiers are the favorites of the traders these days, REC and PFC. Would you recommend accumulation on these three counters?
Good afternoon, Anisha Ajay. Thank you so much for having me on the show. So speaking of L&T, I think L&T has also given a very good fresh breakout today, and it has crossed the resistance of 3,700, which was reflecting on the options chain data. So I think from here, current levels, it's a good accumulation on L&T. It can head towards 3850 plus levels on a positional basis. There is a good, breakout on charts, and also the RSI positive divergence is just adding up to the positive data for L&T. On any dip up to maybe 1%, 1.5% at max should be a good buying opportunity. And the stock has seen multiple support zones starting from 3650, 3600, multiple support zones. I think so anything closer to the support will only add up to it. Talking about PFC and REC, both these stocks have seen very aggressive long built-up positions today. So I think both are also looking quite good on the stock. PFC particularly 430 was the level for the breakout. It has broken above it quite strong. It can test 460 odd levels. I think one must continue to hold the stock, and anything towards 430 can be a good accumulation zone. Similarly for REC, I think REC is heading towards 500. It has tested, though it's important for it to close above 500. Any closing sustenance above 500, it can test 540 odd levels on a positional basis. I think better would be PFC from current risk reward ratio than REC. So I think L&T and PFC would be a better buy.
PFC, Sony also betting on those names. In fact, Lisa is here with us to tell us what to anticipate from L&T's earnings. Lisa?
Yes, so L&T is expected to report a revenue growth of around 17%, and this is expected to be driven by orders, which is expected to be flat, but orders is largely to be led by the international orders, by the large hydrocarbon projects in Middle East. Now, talking about the margin, stable margin of around 11%, that is expected mainly on the back of development projects, but that is expected to be offset by execution of lower margin infra projects. Now, the PAT growth, that is likely to be robust and strong, around 30% on year-on-year basis, and that is on the back of financial leverage as well as lower tax rate. Now, the factors that we have to keep a watch on, that will be the ordering slowdown in the run-up to election. Even the Red Sea issues, the impact of the Red Sea issues on the execution delays, that also is one key factor to keep a watch on. The divestment for non-core business for the Hyderabad Metro as well as Nabha Power, and the new business segments, that is solar, hydrogen, all are key factors to keep a watch on. But most importantly, it is the guidance, whether the management day, the guidance remains intact, and whether they stick to the guidance, because the order inflow guidance was projected at around 10 to 12% and the revenue growth of around 12 to 15%. And most importantly, it was for the core infra margin, which they had downgraded from 9% to 8.5 to 9% in the last quarter. So we have to keep a watch on all these factors, and these are the key factors to keep a watch on.
Just wanted to bring out the stock of GAIL also, because the numbers are just being reported and it looks like it's a big beat versus expectation. We'll get more details as far as GAIL's numbers are concerned, because the first number that I'm seeing in terms of the net income has come in at 2,840 crore thereabouts, which compares with the expectation of 2,282. BPCL has already been a bit of a beat on the bottom line, and seems like GAIL is likely to follow suit. And overall, the numbers do look probably better than expectation. Let's do one thing. Let's quickly head into the break while we are witnessing the reaction on GAIL stock. When we come back, we'll try and get Somit with us to talk to us more about the numbers.
So let's let's dig a little more deeper into the earnings quality of some of the engineering companies. Look at how Voltamp shot up to 10%. The earnings just came out. Profitability has almost doubled and a good surge coming in on revenue front as well. In fact, Daljit, I want to view from you on some of these transformer companies. Look at Voltamp right now. Even last week, transformers and rectifiers, TRIL also shot up almost 20% after good guidance. This entire mid-tier transformer space, especially in light of what's happening in power, do you like this space? Do you have some names there, or are you playing it some other way?
We do like this space. Unfortunately, we don't have any stock right now in our portfolio from this space. We had the biggest name, which we sold off after booking good profit there. Now, basically, two things are happening here. One is that with the demand because what we talked about power sector as such, there is so much of demand for transmission and see, we have for every 1 rupee of generation, you need to invest same amount for transmission also. But somehow in last 40, 50 years, we have invested a lot on generation, but not invested enough on transmission, which is now trying to like catch up some of that in the last 2, 3 years, 4 years. We've seen some of that has happened. With this new thrust on power sector, probably that will only increase. So demand is definitely there. Second is all these are commodity users. No, all of these guys were impacted very badly because last 1.5 years, the prices of raw material was very high. And though they have variation clause in their contracts, but they could not pass on entire thing. And the result was margins were suppressed. Now those things are behind. And as a result, the margins are expanding as well as demand is going. So double, you're getting benefit from both the sides. And that's what is exactly playing for the sector. Once these two things happen, obviously the market rewards it with the re-rating also. So therefore, this re-rating is happening in this entire sector. There are still a lot of these companies which are doing very well, and they're not very obscenely priced, I would say. Of course, they have done a lot catch up there. So maybe at this point of time, entry will require a little more deep dive into it, but definitely there is a lot of scope there.
That's the take coming in on Voltamp right now. Just want to see what the PSB basket as well is up to. You know, PNB came out with very solid set of numbers, good growth in profit despite that 800 crore rupee employee wage hike provision. Good growth when it came to their retail and corporate EBIT as well, much unlike some of their private banking counterparts or even larger peers for that matter. PNB holding out quite okay. Naresh, just wanted to get your sense in on some of the charts of PSU banks, led of course by SBI, and what's your reading now on PNB?
So PNB was a favorite and it has done well. Now the case is, after such a move, the risk reward is not great, but the trend is pretty strong. The stock has moved up from 60 odd levels just 5 months back, but the trend is still strong. Any dips back to 103 to 105 range remain a buying case for the stock. The top pick as of now remains State Bank of India, purely because it has underperformed the whole PSU banking space as such. It gave a breakout about 600, 620, went up to 660, was a failure. Now again, it has come back above the 620 levels. It should get further into momentum post 640 sustaining. So at current levels, with the recent low stop loss at 600 as such, looks like a good interesting bet here. And once it crosses 640, it could surprise on the upside. So structurally, a 1 year, 1.5 year breakout on State Bank of India. So looks promising at current levels and add more on the way up above 640. The next one is Bank of Baroda, which is on verge of a flag breakout today, about 235 odd levels. So that also looks promising. So the top two picks now would be State Bank of India and Bank of Baroda.
Okay, let's address what to anticipate and expect from the interim budget just a few days away. And let's get you some exclusive khabar on what we're picking up the interim budget is going to entail. And sources tell us that the Special Economic Zones Act is headed in perhaps for yet another amendment in the upcoming interim budget. In fact, let me take it across to my colleague Ankur Mishra as well and get in some more details. Ankur?
Yes, after a decision of not coming up with the Desh bill, now we understand through sources that government may tweak SEZ Act for allowing domestic companies to sell within India. Now, what does that mean? That SEZ Act will be amended to give benefits to domestic companies who are operating within the SEZ zone. Now, this amendment will allow domestic companies to sell goods and services within the country, and that has been long-standing demand to make these companies operating in terms of exports more attractive, and now we can see that SEZ Act amendment is on the way. In December 2023, you would remember that commercial office leasing benefit was given as far as SEZ is concerned, and after that their expectation was that there will be Desh bill which will come out with benefits for SEZ zones companies. But all in all, we understand now that through amendment in SEZ Act, government may come out for incentives for companies so that it becomes more incentivizing for companies to sell in domestic markets. Remember last time when this incentivization was given to companies, there was also one of the conditions that these companies also need to return the taxes to get the benefits. So we may see these benefits coming to companies which are operating in SEZ zones, and this will be announced as soon as in this budget itself. That is what sources have informed us.
So that's about SEZ. Thanks so much, Ankur, for bringing us those details. But it's just 2 days to that big event, which is the budget. So there are a lot of stories lined up. In fact, my colleague Prakash Priyadarshi is also picking up that there might be a new scheme for housing announced, and this might be focusing on the middle class as well as urban poor. Prakash, tell us more.
Yes, what we are learning from our sources is that the government is likely to announce a new home loan scheme in the interim budget. This scheme is going to be focused on urban poor and middle class, where the overall size of the scheme could be around rupees 60,000 crore, and the government will provide benefit of interest subvention to the home buyers that could be in a range of 3 to 6%. Along with that, sources are also informing that the home buyers can avail benefit of interest subvention on home loan up to rupees 50 lakh. Along with that, all the modalities have already been completed by the government. As you are aware that the Prime Minister has announced a new home loan scheme for urban poor and middle class, and since then concerned ministries have been working on these modalities. Some of the suggestions which have been made by the Ministry of Finance have also been incorporated in the final proposal, and we are given to understand that this scheme could be announced in the interim budget. Along with that, sources are also informing that this scheme is going to be little different from credit-linked subsidy scheme in terms of size of the houses and other benefits.
All right, so that's something to watch out for in this budget. But moving on, Daljit, I want to talk to you about this entire, the consumer durable side, especially air conditioning. We saw how Voltas and Blue Star and even Symphony to a certain extent went through a prolonged phase of underperformance, almost fell below 800 bucks for Voltas. So was another stock, Amber Enterprises, because they are a contract manufacturing essentially for air conditioning. But last week the management came out and spoke with us how they are diversifying into air conditioning of our railway system and also going into other areas. So essentially moving away from low margin contract manufacturing alone. And the management came on our channel. The stock was locked on almost 10% on Thursday, another 6% today. How do you see this, the opportunity size of companies such as Amber go towards railways and many others actually, contract manufacturing widening their revenue mix? We'll also get you a management bite and then I'll come to you. Why don't we play the commentary which actually sparked the up move?
Since Sidwal, our railway mobility application business, we are delivering solutions in space of air conditioners, doors, gangways and pantry systems. So we will be creating another SPV with Titagarh where we are going to bring interiors and other components. This is one of the strategic tie-up where the Titagarh have their facility in Italy also. So till now, we were not having experience in the global play. We were lacking in the experience. So this venture with Titagarh will also give us a global play. We've already guided the markets. Last year we've touched almost 14.5-15% of ROCEs, and In next 3 years' time, we should be in the range of 19 to 21% of ROCE.
Okay, 19 to 20% kind of ROCE being targeted by Amber. But this entire pocket, Daljit, your thoughts?
This is very interesting, and in fact, we were waiting for this trigger, some kind of trigger to play out in this stock, because Sidwal, if you know, has been there for quite some time with this company, and they were looking for a threshold to come in the railway side of that business. I think this is a good strategy with us. Now they have tied up with another railway company. Mainly that what happens is that this will kind of hedge them against the nature's vagaries. No, not the home and AC business is more related to what happens to the weather conditions. And every time we see there is a delay in weather, summer, or either there is a severe summer or less summer, and all of that keeps making a lot of fluctuations in their business. Now, this will create a hedge kind of thing, because this business, project business, will remain as steady business. Once you get that contract, it will remain with you, and you will have to execute it over a period of time. We know that there is a lot of emphasis being given to amenities being provided in railways, to comfort being looked after, and this business is only going to increase. We did a lot of some research on this, what kind of potential, and we like 3-4 months back we did that study, and we were convinced that this potential from the railway business itself will be much larger, almost 8 to 10 times of what current business is. So that and this company has been on the forefront of that. They have taken another opportunity with another railway provider, service provider. That's a good thing. So I think there is a huge potential in that segment, and the company is doing a wise thing of spreading out to not just staying to the home ACs or to the to exposing themselves to the nature.
We'll take a short break on that note. Thanks very much for your time, Daljit. Soni and Nuresh are staying with us for some more chart checks on the other side when we come back.
Back with closing trades right here in ET Now, and what a fabulous move you're seeing in the market right now. Start of the interim budget week, start of February, and there you are at that 21,700 plus mark already. Today, of course, it's all in all Reliance, which is hit a record high. It's hit that 19 trillion market cap level as well. Along with that, ONGC as well, which is also at a 9-year high intraday. It's trading above all key DMA levels as well. So that's really contributing as well. In fact, I think Reliance single-handedly is contributing to a 100-point move alone on the index. ONGC now scaling up higher, nearly by about 8%. HPCL has seen a decent move, 6.5% higher there as well. Adani Enterprises, and I think it's due to report its numbers on Feb 1st, the budget day itself, 6% of a tear coming in there. And then there is Coal India as well, which is higher by about 5%. Deepak Shenoy on the show with us. And Deepak, you must be all smiles. Finally, Reliance comes out of its hibernation.
It does. In fact, it did a little bit earlier as well, because you had to factor in that Jio Financials was demerged. So while it's made its all-time high technically today, I think it had been done a little bit earlier, because if you consider the 250 rupee extra that you would have got if you owned Jio Financial as well, I mean, because it was demerged, then the price is actually above 3,000. It's been a long time coming, but we're hoping, of course, more will happen and more will come in the future. It's one of the largest elements of our portfolio, so very biased in that respect.
You are lucky to have it in good amount, because good quantity, so that the up moves actually make a difference to your portfolio. Sandeep, what are your thoughts on Deepak? What are your thoughts on AU Finance? That one got in this kind of a roaring market because of the asset quality fears, and there are concerns obviously after the results. The stock is up down 11.5% right now. Have you looked at the numbers? Because it talks a lot about the category they are operating in. It is perceived as a risky category, and there's some merit in that risk.
I haven't seen actual numbers.
Okay.
We don't track AU Finance, but the whole, I think if I'm not wrong here, they're more into the unsecured lending space / microfinance. So there is there is that level of fear that RBI has now created, that lending has reached a point where it cannot grow or should not grow, according to RBI at least, in any meaningful format. RBI, I think, has taken cognizance of the fact that it's very difficult to recover small ticket unsecured loans, and they're going after the category in general. I would feel here for NBFCs there's a double whammy, because you get both a higher cost of capital when you borrow from banks, because banks have to now place a higher risk weight when they lend to NBFCs, and NBFCs also have to put a higher risk weight when they lend to personal unsecured loans. So for them, it's both a higher borrowing cost and a higher provisioning impact on their capital. So that impacts the stock a lot more. I haven't seen specific commentary by AU Finance and their numbers, so I'm sorry I can't put much more of a color on it. But I would say at this point, I'm not really interested in the financials, at least in the coming year so much. Simply because I think credit growth, and other structural issues impact financials per se.
Financials not top of the recommendation list for you at this point of time, but Naresh, I wanted to bring you back into the conversation. What's the positional trade one should attempt on ITC ahead of its numbers?
So technically, it's been sideways for the last almost 6 to 8 months. Overall, 480 has been the problem zone, 440 has been the support zone. So out here, technically, there is no built up going into the results as such. But if somebody is looking at a trade, it has to be more on the long side. The stock has a lot of support around 440, 450 band. So stop loss below 440 and expect a bounce towards 480. So overall, more like a case wherein you're taking a risk going into the results. But technically, the case is more for the long rather than on the short side.
A long recommendation if you must take a trade on ITC. The volume growth for cigarette business is expected to be around 2 to 3% itself only. But in terms of the other big movers in the last few minutes, Infibeam Avenues has actually been doing quite well for itself. There are a lot of these public sector entities like RITES, NBCC, SJVN, they're all perking up, and even names like NBCC, Ganesh Housing, they're all the stocks which are buzzing around in the trading session. However, on the losing side, apart from AU Small Finance Bank, there's also SBI Cards, which is coming under pressure. But Sony, if I had to ask you from the power sector and power generators, that is, Tata Power, JSW Energy, SJVN of the world, is there a stock that comes to mind as a recommendation purely on charts, or everything is very overheated?
I think there's still a lot of momentum left. If we look at the charts of Tata Power, it has actually given a fresh breakout today above 365, 368 odd levels. So I think Tata Power is still a good buy on a positional basis. Any declines that you can see towards 375, 373 is a good range to re-enter and reinitiate the longs again and look for targets of 400, 410 plus. The stock has also seen good rollovers on the longer side. So I think this is definitely a good pick from the F&O sector. And from the cash spec, SJVN, we've seen it, continuously moving quite up. So I think for SJVN, technically, you see it's a good positional buy for the long side. So any dip that can be seen towards 120 will be a viable zone to enter and reinitiate the longs and for targets of 140. So it has seen multiple support, but the crucial support that it is holding right now is of 105. So I think 120, 115 should be the range one can re-enter and reinitiate the longs for SJVN.
I want to understand your portfolio strategy, start of the year to now. Anywhere where you've trimmed positions?
Was this for me, Aisha?
Yeah, Deepak, for you.
Hi. Yeah, we haven't done much. I think the only thing we've done reasonably in the recent past was to exit a little bit of escorts and maybe do a little bit of rebalancing. But the escorts being, there was a special situation that we were looking at, and that's kind of played out. So the stock has done well, but the special situation no longer applies. So we found other stocks that were more interesting to participate in, but or rather to increase our positions in. We're still very strong on specifically India-focused stocks, stocks that are actually developing and building for India, whether it is in semiconductors or in in the import substitution area, the infrastructure area, railways and defense continue to be some of our key picks. We've got very little in financials, very little in IT. I think those are the two areas, and almost nothing in pharma in our fundamental driven strategies. And at this point, I think I'll still wait for results to finally come in. Things don't look as exciting as they were in the October news time when we saw the September quarter results come in. This time, the results are not as great in terms of an increase in revenues or in profits as last time. But I think there are pockets of excellence. We're seeing some extremely good results. The likes of a few players that are benefiting from operational leverage from the tiny caps, from like Tips India at the smallest end to an L&T at the largest end. We're seeing a lot of improvement in operational performance and operating leverage kind of starting to play out. So I think adding more to our current positions rather than adding a new position at this point. But I'll wait for results. Everything can change in a few weeks.
Deepak, I want to quick follow up on Escorts. You say you trimmed position or you exited? Because I wanted to understand once Kubota actually increases their dealer network around here, which I'm told is underway, or even tries to make Escorts a center for global exports, all of that. It may take time, but that play could be big. Are you not wanting to stick around for that entire thing to play out, or you just you just trimmed exposure or exited?
We don't have a position right now, though, to be honest, we have to see some of these other things play out. See, the reason we got into Escorts was a special situation where Escorts, by virtue of, 30 or maybe nearly 40 years ago now, there was a hostile takeover of Escorts attempted by an NRI person, I forget his name, but during that time, the Escorts management had very little ownership of Escorts. So eventually what they had done was use the company money, and at that time it was, there was nothing illegal about it at that time, but they used the company money in various ways to effectively purchase shares of the company itself, which eventually sat in an ESOP trust. 25% of the company was owned effectively by this ESOP trust, which was only benefiting the company. There was no ESOPs given out at that time. That I was primarily to stave off any other hostile takeovers that could have come. And when Kubota took over, they said, we're going to write down this 25% to zero. Effectively, if there were 100 shares in the company, there would only be 75 shares remaining for no cost. So effectively, your EPS would go up and effectively shareholders would benefit. And the stock was at 1,600 odd at the time, and now it's 3,200 plus. And that special situation's played out. Whereas the future scope and prospects, I think we will wait for some of these things to actually take effect, because I think the stock is priced in a lot of this detail. And therefore, I don't see an incremental opportunity as big as I see in some of the other stocks. I could be wrong, been wrong a lot of times before, but I know that, I'm going to have to take the ups and the downs by myself.
You have to take the ups and the downs, and of course the success rate of nobody in the market is anywhere close to 100%, right? But let's just focus and talk about some more budget cover that we have for you. We understand that the government might be looking at extending some of the benefits that they had given to the manufacturing units. What could be the shape and form of these extensions, and what would it mean for the sector? Let's take it across to Prakash to get more on the story. Hi, Prakash.
Yes, we are learning from our sources that the government is likely to provide relief to the manufacturing sector in the interim budget. We are given to understand that the government is likely to extend the deadline to avail benefit of a lower tax rate of 15% for the company just starting manufacturing unit in the country. Company just starting manufacturing unit may continue to get benefit of lower tax rate of 15% beyond March 2024. Sources are saying that the existing deadline, which is going to be expired on 31st March 2024, likely to be extended for a year till March 2025. A very significant development coming in. Sources are also saying that the industry has been requesting government to extend the existing deadline beyond March 2024 in order to provide boost to the manufacturing sector. This move is likely to help India to become next manufacturing destination amid a complex geopolitical situation. As you are aware that the government had announced such provision in the year 2019 for the companies incorporated on or after October 2019 to get a benefit of a lower tax rate of 15%. But there was a condition which is with regard to commence production on or before March 2023, which was extended for a year till March 2024. Now we are learning from our sources that this deadline could be extended for a year till March 2025.
That needs to be watched out for. But meanwhile, Adani group of companies also coming out with the results, Adani Green in particular. And we have Amit Singh, CEO of Adani Green Energy, talk about the way forward and the performance this quarter.
In 2023, the global annual renewable capacity addition increased by almost 50%, the fastest growth rate over the past 2 decades. We expect this momentum to continue through the decade, aligned to the pledge taken by several countries at COP28 of tripling renewable energy by 2030. India is a rapidly growing economy, and renewables will play a crucial role in its growing energy demands. Our country has taken several policy steps to advance towards the 500 gigawatt non-fossil fuel capacity target to be achieved by 2030. The key ones include strengthening the supply chain, building the transmission network, creating storage solutions, and finally, mobilizing the capital resources to meet the significant capital outlay needed to convert this vision into a reality. At Adani Green, we remain focused on our 2030 target of 45 gigawatt, and with the latest capital raise initiatives, we are on a well-secured growth path towards this target. Let me take you through some of the important recent milestones. Post the recent shareholder approval, we have issued equity share warrants to the promoters for a total investment of rupees 9,350 crore, out of which 2,338 crore has been received and remaining amount is expected over the 18 months. We've completed JV with Total Energies for 1.05 gigawatt portfolio, thereby raising rupees 2,497 crore. We upscaled our debt funding pool under the construction financing framework by USD $1.36 billion to USD $3 billion.
Point taken. But just taking a look at some of the pharma sector stocks as well, Cipla is one of the biggest drags on the index right now. So that's one stock to watch out for. In the con call, actually, the company highlighted that they have a couple of launches which might get delayed. So that's the reason, despite a very strong show on the earnings, that stock is coming under pressure, while you have Sun Pharma, which is gaining ground purely on account of Taro's kind of performance. But Soni, if I had to ask you from the pharma pack, is there a stock that you would recommend as a buy?
Definitely, Anisha. I think from current levels, I can see Glenmark is holding a good buy level. So it has seen very good aggressive long rollovers from January to February series, more than 95%. And also it is hovering around its resistance zone of 900. So I think the moment it is able to cross 910 odd levels, you can see a fresh rally in Glenmark Pharma, and it can head towards levels of 940, 950. I think this is a good risk reward ratio it can place, because once it's above 910, you can keep a stop loss of 890 and then look for targets of 940, 960.
There's a mid-tier company into LNG storage, Ganesh Benzo, which shot up today after Anil Goyal has actually picked up preferential shares of almost 20 lakh. And this is in focus because just recently we had another Inox, a company which is again into gas storage. Can you check the charts for this one? Pull up the last 1 year chart if you can. And the stock is around here only. Is this a breakout or can't say for sure right now?
So this is a stock which I track closely and have an exposure. So I have a little positive bias here. But if you look at the technical chart structure, for the last 1 year, this might be almost the fifth attempt around that 175 to 180 mark. There have been two previous fundraisers, which was done by Malabar India Fund, and now we have Anil Kumar Goyal into the fundraise again. The stock has gone in this range of 140 to 180, roughly almost 5-6 times on both the end. So if it sustains 180, that would be a major breakout. The recent high in November also was closer to 177. You go back to August, the high was around 180.85. And then March, April also, the stock had made a top around 180.85. So out here, the stock is setting up for that breakout eventually above the 180 mark. And if that happens, you have a much bigger target going forward. So structurally, good enough consolidation done sideways. Fundraising, I think, should be done. So it's an interesting case if one has a medium to, say, a longer term outlook here.
So that's the view coming in on Ganesh Benzoplas. But let me quickly do one thing, take it across to Sharad as well. He's joining us to talk to us about what's the latest khabar on Concor. Sharad, take it away.
In focus is Container Corporation of India, and what we are hearing from the dealers is strong absorption is coming from the HNI segment. Now even the volumes, if you look at it, it's coming in at almost 3 times its 20-day average. And do remember the numbers recently were posted on 24th of January. The numbers were weak, there was some selling, but now the absorption is coming in the HNI segment. Now if you look at it, the Q3 numbers were impacted because of global trade disruptions in the Red Sea, and the street is factoring in that this might not be a structural impact going ahead for the company. But on the domestic front, if you look at it, the volumes have been strong. They grew almost 13% year-on-year basis, and secondly, even the margins have improved going ahead. Now the street is also factoring in the commissioning of the Western Dedicated Freight Corridor. Now that can be a re-rating trigger for the stock going ahead. The JNPT section is what I'm talking about. And importantly, Duvama also at the brokerage house has stated that the earnings could double over the next 3 to 4 years, led by the DFC-led volume going ahead for the company. So strong absorption coming from the HNI segment after the sell-off which we had seen after the company had posted weak quarterly numbers.
Let's go across to our techies and also find out what kind of BTST trades are visible. Duresh, what are the trades on your radar?
So first would be a buy on Container Corporation. The stock has made multiple bottoms around this 820, 830 mark and reversing from it. Expecting a move towards 875 odd levels. Stop loss at 855 now revised. Second would be a buy on Bank of Baroda, which is on verge of a flag breakout about 235. Stop loss at 232, target price of 240.
What are your trading ideas?
So the first
Sunny?
would be Jindal Steel and Power. So I think you can see a stop loss with 720 and target of 750, 760. It is closing above 20 EMA, backed with good rollovers on the longer side. So the first buy on Jindal Steel and Power. The second pick is on Bharat Forge. Bharat Forge is also witnessing good long built-up positions today. With a stop loss of 1220 and target of 1300 can be seen in the coming days for Bharat Forge.
Top recommendations. In fact, Sony as well as Naresh, we'll let you go on that note. Let me toss it across to Shrishti to get a sense of what the expectations are from Dr. Reddy's in the meantime. Shrishti?
A decent set expected from Dr. Reddy's this time around, though the North America sales is expected to see a jump of 6 to 9% on a sequential as well as on the YOY basis. But the price erosion could keep the numbers in check this time. While on the India business, because the company has already divested some of their plans as well as the weak acute business could impact the sales number. India sales is expected to be just up 2 to 7% this time around on a YOY basis. All of this could impact the numbers. Onto the profit figure, we are expecting a decline of 10% on a sequential basis, though the margins expected to be flat around 29%. But there could be a surprise from the India business, then we will watch out for the margin performance as well. Onto the top line, we are expecting that to be flat at 7,000 crores and similar performance expected from the EBITDA front as well. So all in all, a decent set expected from Dr. Reddy's, but the margins will be key to watch.
Thanks so much, Shrishti, for that. But last 1 minute left for the trading session. So let's wrap up the day. And of course, it was a good trading session, ending close to the highest point of the trading day at around 21,750, almost a 2% surge, a 400-point rally on the Nifty. Sensex was up a solid 1,000 points, and the Bank Nifty also showing quite a bit of traction. And of course, even the mid-cap and the small-cap participated, with the advance decline ratio clearly being in favor of advances. The big star of the trading session, no prizes for guessing at all, it was Reliance Industries with that massive surge of over 7%, 19 lakh crore in terms of market capitalization at record high, and the single biggest session gain that we have seen since May of 2022. L&T wasn't too far behind in terms of the gains, because that stock is expected to come out with its numbers tomorrow. Ahead of that, there's a bit of a rally. HDFC Bank, Kotak Mahindra Bank were some of the other gainers. On the other hand, ITC ahead of its earnings was a bit soft, so almost a 2% cut on ITC. Infosys, Cipla, Bajaj Auto were some of the other losers. But in terms of the sectors, it was energy. Take a look at that solid rally on ONGC, a 9% surge. Coal India was higher by 7%. Tata Power, solid rally. BPCL, GAIL saw some result reactions as well. Even PSU banking names like IOB, Punjab Sind Bank, Indian Bank were all rallying in the trading session. In fact, all the sectors were in the green today, with a slight bit of underperformance from FMCG pack given the kind of red color we have seen from ITC, but clearly a great start to the week, and it's an important week at that of elections, so we'll watch out how it pans out. But for now, the day belongs to the bulls. Thanks so much for being with us.